If you pay a little bit of attention at the gas pump, what is going on there, you will realize that prices have been going up lately. And President Biden is not happy about that, because the truth is the prices of oil and energy as a whole so far this year, and since we came out gradually out of these 2020 lockdowns, prices started soaring, and it seems like it's not gonna go down anytime soon, at least till maybe 2023. So President Biden actually did something pretty interesting today. He decided to go ahead and tap into what we call the Strategic Petroleum Reserve. This is the reserve that any big country like the US or India or China have when it comes to, situations that are dramatic, and they need to tap into those reserves, those inventories, to make sure they want to kind of balance. Because the thing is, on one side, as I mentioned on one of my video earlier yesterday, you have the OPEC plus. This is the cartel, the group of countries in the world producing oil. Saudi Arabia, the US, Russia, Nigeria, etc., etc. So these guys have been saying that we need to make the money we didn't make or we lost based on what happened in 2020. In March 2020, at some point, oil was trading below zero. This was negative. You didn't see that at the gas pump. This is what is happening in the stock market, right? As a commodity. So this is not good if you are a producer of oil and oil is trading negative. It means you are paying people to buy oil. It's supposed to be the other way around. So just to give you to the extent how critical and bad the situation was for these guys in 2020. So here we are, and people are going back out. People are traveling again, especially as we get into the holiday season. People are driving, people are flying, and data shows that business travel is also on track to recover. But the thing is, that OPEC plus, those guys producing oil decided to tie up the supply. And as any other commodity and asset in the world based on supply and demand, if there's no supply, the demand growing up means prices are supposed to go back up. And that's why President Biden is not happy. China is not happy. India is not happy. Japan is not happy. And that's why they're trying to flood the market, the oil market, with additional supply, but coming now from their strategic reserves. But the thing is, those reserves, they need to be filled back in the next 1 to 3 years. And now that oil is trading at what, maybe $80 a barrel for the one trading at the London Stock Exchange, predictions are saying that in June, oil can be trading at $120. Even some traders are now starting to bet that oil can hit $200. So it doesn't make that much sense that you will sell at 80 and buy back to fill up those inventories around a higher price. You are going to lose a ton of money. So today, the US will release 50 million barrels of crude from the SPR, Strategic Petroleum Reserve. But this will cause an elasticity, a volatility in the energy sector, especially in the oil sector. Why? Because this can create so many good opportunities for you to make decent gains, decent money. And I shared with you yesterday, as a matter of fact, I shared with you Colombia Petroleum stock, which was down big time. And as of yesterday, this was sitting on what, $52, $53 a share. And just look at how, based on the news that I just shared with you, it gained 9%. And it's still not trading at what it was trading when this whole thing started with the new cases spiking back up in Europe, supposedly, all right? So we're still looking at what, 65, 62, and the price target here is 78 at the highest. So there is still a lot of money to be made. But even better, you can also position yourself into Devon Energy. The good thing with Devon Energy is that not only they are giving a fixed dividend, but they're also giving a variable dividend. So you're getting 2 dividends if you decide to hold Devon Energy. And another good thing, the price target here is around the 48. So we are still looking at some decent gains here when you look at where it was trading, what, in January of 2017. All right. And we are close to that and even past that, because even here, the prices were higher than they were at that time. Another one, you can also position yourself to benefit from this huge volatility to be happening in this market, is Centennial Resource Development. All right. Oklahoma, I believe they are, Denver, Colorado, this is where they are located. But the price target here is 9.5. So 9.5, this is looking at what, 30, 40, 45%. Those are no-brainer, guys. All right. Nobody is talking about the energy sector on mainstream media. I mean, not to the same extent they're talking about other stocks like the technology stocks. Why? Because this is one of the bulliest sector in this bull market, but nobody is really pushing it because they know it's going against the agenda of the current administration when it comes to solar energy, renewables, and electrical vehicles. But hey, all is here to stay. And that's why some people tend to forget. But that's usually where the big money is to be made. So be smart and get in early before you get left behind.